So yeah, the Bitcoin ETF itself is not something I would buy because it's futures based, and I generally don't like futures based commodity ETFs. But what it does signal is that the SEC is more open to it. I mean, we've heard, for example, the SEC chair has referred to Bitcoin as as a useful invention. He's been more critical about other types of crypto assets that more closely resemble securities, whereas Bitcoin is classified as a commodity because it doesn't pass the Howey test of being a security. And so overall, I think we're getting more signs of favorable treatment to some extent, at least for Bitcoin. And that signals to large pools of capital that it's somewhat safe to buy in the regulatory sense. Might not be safe in terms of price, but it's somewhat safe in terms of regulatory, clarity. And so smaller investors didn't care about that. I mean, they wanted to buy it regardless of the SEC's opinion. Whereas large pools of capital, I mean, they can't invest $1 billion into something and then be told the institutions can't own it or something like that, and have to sell at unfavorable time when other institutions are selling too. So the more regulatory clarity they get from the Fed, who basically said they have no intention to ban crypto, that was Powell's statement, and then when you get more clarity from the SEC, that tends to be helpful. There's still somewhat lack of clarity from Treasury and Congress around the issue, but now they're even Bitcoin bulls in the Senate or in the House, for example. And so overall, I think it's kind of reached a point where it's got some level of critical mass that I think is that these more institutional types of capital are interested in. So the risks going forward, I would say one is just obviously Bitcoin is very volatile, right? So, Bitcoin could be between the time of saying this versus the time this is published, this could be Bitcoin could be down 20%, right?
Mm-hmm.
More even. It's a very volatile asset still. It's kind of finding its total addressable market. We obviously saw more than a 50% correction earlier this year, something between 50 and 60% down from its all-time high, and so it's a very volatile asset. And so I think the main risk is kind of managing that volatility with a position size that makes sense for you. There are some other risks, like obviously it's gone through regulatory challenges in China and other places. So it's more of that global game theory where one country could ban it, but another country can open up to it. So we've kind of seen different countries approach it differently. We saw India, for example, was weighing the possibility of banning it, right? So their central bank cut off the financial system. The Supreme Court overrode that. Then it was being talked about in Congress to maybe ban all ownership of it. And now that never went through, and now that's kind of being reconsidered, right? So countries are flip-flopping on it, but there's still, there's some countries there's regulatory lack of clarity, and then also, I would kind of describe it as sort of a denial of service attack, where whenever Bitcoin does well, many of these other altcoins do very, very well, and that can eventually kind of help end the bull market, because even though you can't make more Bitcoin, you can make tons of these other altcoins. And it kind of helps, saturate demand for that cycle, and then it rolls over, and then all those projects, the vast majority of which are useless, the liquidity drains out of them, eventually finds its way back to Bitcoin, and then the cycle starts anew, right? So I think there are a couple key risks to look out for, but most of them are manageable with position size management. I think that's the main thing. I think a key focus I'll have for years, I believe, is on energy policy. I think it's gonna be a really important thing to watch, because the degree to which we have energy shortages or lack thereof will be very important for overall inflation, which is then very important for all sorts of different policies and different asset classes. So I think watching the energy environment is going to be more important in this decade than the prior decade, both in terms of say the possibility of higher energy prices and more scarcity, but also times where that could be the opposite for a year or 2 years, where you're starting to get signs of abundance, right? So I think that energy policy overall is going to be a much bigger factor this decade than the prior decade. The fact that real rates are super negative now when you look at CPI, gold doesn't really care too much. Instead, it looks at the TIPS market that is basically measuring inflation expectations over the next X number of years, depending on which type of treasury it is. But of course, those are influenced by the fact that the Fed is buying those TIPS and buying different types of bonds in general. And so gold is somewhat of a more financialized market. And so it basically, I think overall, if more pools of capital were to, kind of panic and realize that this isn't going away anytime soon, and that some of their yields are basically going to be underwater for many years, I think you could see more of a flow into those spaces. And it's obviously it's hard to say how much would be captured by Bitcoin, how much would be captured by silver, how much would be captured by gold. But I think there would be a general shift towards those types of assets. So when we think of growth stocks and value stocks, there's multiple sectors that are generally in each of those categories. Now, there's no hard definition of what a value stock is. It generally means a cheaper stock where it's less about growth, more about kind of, returning capital to shareholders, paying a dividend, just running a stable business that might be growing moderately, might be going sideways, but basically it's cheaper and shareholders being rewarded with that capital. Now that value stocks can exist in any sector, right? There can even be tech stocks that are value stocks, but generally you find more of them in certain sectors, right? So financials, healthcare, energy, places like that. But even there, you can't necessarily group them all together because we can divide them into defensive sectors, defensive value. That'd be things like healthcare and utilities, where they're rather resistant to recessions. They basically don't have that boom bust characteristic as much. Whereas when you look at cyclical value, that's things like banks and energy and commodities, where and industrials, arguably, where you have these kind of big ups and downs, and they're very, very economically sensitive. And so when people look at growth to value, it can really help to separate defensive value versus cyclical value. And I think I referenced the top-down charts team there because they have some great charts on separating those two sub-factors. I view it as straddling both, and in some ways I view it as kind of gold and a tech stock combined. So on one hand, you're investing in the idea that this technology will probably continue to take market share in some ways. There's ongoing development around the ecosystem. There's ongoing development on layer 2 technologies. There's still upgrades happening even on the base layer, like Taproot, for example. So basically, you're getting this kind of technological S-curve adoption. But on the other hand, it's also, now that it's big enough, people view it as partially an inflation hedge, especially because it's not just the US. I mean, there are countries that have 20, 30, 40% inflation right now. And many of those people go and they buy Bitcoin as part of their holdings instead if they can access it. And so overall, I view it as it's got that monetary aspect of gold, but it's also a tech stock. And obviously, it's very different kind of risk reward than gold, because gold is obviously this 5,000 year established store of value, whereas with Bitcoin, it's 13 years old, and you're investing in the basically the probability that it's going to continue to monetize and reach whatever total addressable market that it's going to reach. So they're two rather different approaches, but I think that they somewhat kind of benefit from each other in a portfolio, right? So the periods of time where gold could do better, there are periods of time where Bitcoin could do better, and it depends on how much volatility someone wants in their portfolio. So I think when we look at tech stocks now, especially FANG stocks, many of them are not rapidly innovating anymore, right? So they've reached a very dominant market share, and I think they're kind of eventually slowly going to transform into value stocks that are already very expensive. And so there's that aspect. And then if you look at growth stocks in general, many of them are just extremely highly valued when you compare them to revenues, when you compare them to earnings. And those aren't scarce, right? So if they're highly valued, the CEO can issue more shares of that company to raise capital and try to grow faster, right? So you're buying into something that you're putting a monetary premium on something that is not scarce. Shares of a company are not scarce. Whereas Bitcoin can get larger than any individual company because it's not tied to earnings or revenue. It's basically being measured as its usefulness as money. And essentially all monies are just kind of ledgers that we have a reason to believe are secure, right? That no one's going to just add to, no one's going to, take ours away. And so when we're kind of looking out, at Bitcoin's adoption, I think it's earlier on its adoption curve than many of the large tech stocks today. And because it's like total number that exists cannot adjust to demand, right? So it's not like the CEO, there's no CEO of Bitcoin that can say, wow, there's so much interest in Bitcoin. Let's go ahead and make another 5 million Bitcoin to satisfy all this demand for our stock. Like say that you can do it Tesla, you can do it any of these other types of growth stocks, whereas with Bitcoin you can't. So because it's a monetary good, it's kind of used as collateral. In some countries it's used as money. Because there's that global demand for it, and because it doesn't have a kind of flexible supply, it's somewhat of a different basket overall than tech stocks. And I've been kind of in that weird camp of being more value inclined and also Bitcoin bullish, whereas often you see people that like Bitcoin also generally like the Teslas of the world and the growth stocks of the world. Whereas there are a handful of investors out there that are more concerned about high growth equity valuations, right? But then also bullish on Bitcoin because they conceptually put them in a somewhat, overlapping but different bucket.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.